Michael Lee Chin made 30 million US dollars a year just from NCB dividends alone. So what are dividends and how can you get a piece? I'm Kalila Reynolds, financial journalist and educator based in Jamaica. So one of the things to come out of this whole NCB Financial Group dividend saga is news that majority shareholder Michael Lee Chin reportedly brought in 30 million US dollars a year from dividends alone. Of course, that's when NCB was actually paying dividends, but that's about 4.6 billion Jamaican dollars for doing nothing, just owning the company. Now, unless you're a majority shareholder for a very large and very profitable company, I don't think you'll be earning that kind of money, but there are many investors who earn a very nice living by investing in dividend stocks. I call it sit on and collect. So let's start at the beginning. Dividends are your share of a company's profits once you become a shareholder. As a shareholder, you are part owner of a company, so you are entitled to profits when the company does well, unless the company needs to save those profits for other reasons. Not all publicly listed companies pay dividends regularly for a number of reasons. They could choose to reinvest the profits into the company so that it can make more money. They're saving for a big acquisition or saving for a rainy day if they believe tough times are coming. On the other hand, some companies are what you call dividend companies, meaning they pay dividends regularly, usually quarterly, semi-annually, or annually. A lot of blue chip companies are like this. In Jamaica, these include Carreras, Seprod, Trans-Jamaican Highway, and even NCB before COVID. Investors can usually bank on these regular payments, so it becomes passive income, money that you don't have to work for. You get a check in the mail or a direct deposit to your bank account for no reason other than being an owner of this company. Now, a company's board of directors calls the shots on dividend payments, and only investors who are shareholders by the record date will be eligible to receive payment. The record date is the day a list of eligible shareholders is compiled, so you can't come and hurry up and try buy the stock just before the dividend payment and then sell it after. Now, although people do watch those record dates and some prices have been known to go up right around that time. So how much you get paid comes down to two things: how many shares you have in the company and how much the board decides to pay out. Remember that most times dividends are coming from the company's profits, so management will try to balance paying out dividends and still having enough funds to reinvest in the company, save, etc. For example, for the past couple of quarters, Grace Kennedy has paid out 50 cents per share as dividends to investors. That means that if I own 5,000 shares in GK, when they pay out dividends, I'll get $2,500 before taxes. And yes, dividend payments are taxed. Like I said before, it's income, so the government has to get their share. Like with all investments, not every dividend stock will be a good match for every investor based on your own risk appetite. But there are dividend stocks in every industry, so you just have to do your homework and find out what works best for you. Keep in mind that companies with consistent earnings and healthy finances usually make the best dividend stocks. And that's the bottom line. So are you interested in dividend investing, or do you already do it? Let me know in the comments. Take our Investing for Beginners course to learn how to start investing. The link is in the description below. Let's get this money.